Okay, everybody. Hey, can you hear me? Happy at near all-time highs. Pierre, are you here?
I am. Hey, Pete, how are you?
Thank you for braving the X bugs today. Everyone who came out for the spaces. I know it's been tough out there on X. Notifications are dropping, tweets are disappearing from the timeline. It's all very suspicious. We hope Elon is taking care of it. Well, excellent. We've got a great Bitcoin at treasuries.net spaces for you all. Appreciate the regular listeners who came back after yesterday. If you missed our debut spaces, we had Will Reeves from Fold, kind of giving his view as a Bitcoin CEO. Today we've got someone who I really just think is one of the clearest thinkers in the Bitcoin space and has been for over a decade. Somebody I go to for advice on topics. Pierre Rochard, founder of the Bitcoin Bond Company and host of multiple podcasts in the space, Bitcoin Corp for Corporations pod, as well as the really excellent Satoshi Nakamoto Institute pod. Is that's still running, right? We're still up.
It is, yes. So it's called The Reorg, and you can find it in your favorite podcast apps.
Excellent stuff. And of course, if you want to read any of Pierre's writing there, definitely has aged the best of some of the things that are written in the space. So, yeah, I guess I want to dive in, Pierre. We've been talking about Bitcoin Treasury stuff for a while. You've certainly evolved my thinking on it. I guess I initially, like most people, kind of dismissed the sector. I didn't really get that Bitcoin finance really was. I guess an opportunity to really do like apply what people are doing, right? When people are buying and holding Bitcoin, we're sort of engaged in a bit of a speculative attack to draw your lingo, right? We're leveraging ourselves between these two financial worlds, right? The fiat world and the Bitcoin world, and we're seeking to kind of benefit ourselves financially by arbitraging the two systems, if you will. So I don't know. Maybe you can give your standpoint on Bitcoin treasuries, really just Bitcoin finance. Like, what do you see as the big picture for Bitcoin finance?
Yeah, so I think that we can start it with a very simple thought process, which I think a lot of retail investors might be familiar with, which is thinking through if you have a mortgage, you bought a house, let's say you bought it even before Bitcoin existed. A lot of people will ask themselves, well, should I pay off my mortgage early or should I buy Bitcoin? And so the mainstream personal finance people like um, Dave Ramsey will say, "Oh, you should pay off your debt first, whether it's a mortgage or a student loan debt or a car loan. You should pay that off first before buying Bitcoin." And the counter argument would be that you should not pay off that debt first because the cost of that debt, let's say it's 6% or 7% interest annually, is less than the expected return of holding Bitcoin, which historically, if you average it out, it's about 30 to 50% a year. And so it would just make sense to buy Bitcoin instead of paying your debt off early. Now, I think then it turns almost pathological, or things go sideways when people say, "Oh, you know what? I'm not going to pay off my credit card debt." The challenge there is that credit card debt might have an interest rate of 20%, and that can become a problem given the cyclical nature of Bitcoin. You want to have long-term financing. So people have been doing this on an individual basis for the past 15 years, let's say, in various forms. Now, Bitcoin has gotten to such a scale, and I think Michael Saylor and MicroStrategy have opened people's eyes to the fact that you can do this inside the corporate form. And there's a few advantages to doing it inside the corporate form and disadvantages. Frankly, there's trade offs. The biggest advantage is that it's a limited liability corporation. And so if the leverage goes sideways and the company goes bankrupt, it does not affect your credit score. It does not mean that you lose your house, right, or you lose your car. So there's advantages to that. The other is a question of scale. there's economies of scale when you are leveraging up. And so, if you are a big multi-billion-dollar corporation, you can access better terms, that is, a lower interest rate over a longer period of time, with maybe even more generous. You don't have to pay interest for this amount of time, type deals. The I think the third advantage is one that is really fascinating, which is that you can, in the corporate form, borrow against the Bitcoin more easily and on better terms than on a personal level. So if you're doing a personal loan that is backed by your own Bitcoin, you might be able to get a 12% interest rate. You might get a 1 year term, and most the most dangerous part of this is that if the Bitcoin price crashes, the lender can liquidate you. They'll sell your Bitcoin to pay off the loan. And so you could lose your Bitcoin by borrowing against it. So this is very risky. Now, what we've seen in a lot of let's look at MicroStrategy. um, Saylor has negotiated terms so that there is no liquidation trigger. So even if Bitcoin flash crashes to $10,000 tomorrow, that doesn't mean that Saylor's creditors can sell the Bitcoin and liquidate him. Um, and that gives him the opportunity to ride through that volatility and to be able to continue to perform the financial engineering without that giant risk of liquidation. And so I think those advantages have, one, created value for shareholders if we look over the past 5 years of MSTR's performance. And two, it's attracted lots of imitators and copycats and competitors who have been launching over the past 12 months to really capitalize on that opportunity that Saylor has highlighted.
All right, quick recap. We've got fiat's going down, Bitcoin's going up. Companies have different risk profiles and access to capital. You mentioned that shareholders are attracted to this. It's creating shareholder value. I want to do something a little bit different today. Try to dive down as specific as I can, as quick as possible. I've been trying to download these new financial metrics, right? So there's this kind of wave of new terms and ways to evaluate Bitcoin companies. You can go to the BitcoinTreasury.net glossary. A bunch of them are there. Adjusted Bitcoin yield, Bitcoin per share. I want to talk about mNAV, right? So this is market cap to net asset value. It seems like this is sort of the metric that people are sort of most rotating around, right? Where this was kind of the first thing that was put forward as you should value a company based on its mNAV, and a company that has a high mNAV should be seen as well. I'll let you explain it because I think I'm still learning. Can you give us the 411 on mNAV?
Yeah, sure. So, if we unpack what the acronym stands for, it's multiple to net asset value. So, net asset value is you take all the assets of the corporation and then you subtract the liabilities, and that's the net asset value. Now, in the case of Bitcoin, there's debates about how to specifically calculate it for a Bitcoin treasury company. But let's just assume in the perfect form, you would take, okay, what's the total dollar value of the Bitcoin today? Subtract out the total dollar value of all the debt that the company has, and that'll give you the net asset value. Then you want to look at, okay, what is the market cap of the equity? Normally, you would think that the ratio between the net asset value and the market cap of the equity would be one, that the mNAV would be one. But interestingly, that has not always been the case. So if you look at the history of MSTR and their mNAV, when Sailor started in 2020, it was around 8 times. And then it really went down a lot in the bear market. So in 2022, it spent a whole month under 1x, meaning that MSTR's equity was valued for less than the net value of its Bitcoin, which again is seems unusual. You so then it re-expanded after that 1 month, and over the past 12 months, it really has gone on a bull market, and so now it's around, I believe, it's 1.9x mNAV. And so there's lots of questions of, well, is this financial alchemy? Because how are you magically creating a multiple from an asset that anybody could just go and buy Bitcoin? And so for the skeptics, they look at it and they say, okay, well, let's to make the math easy, let's say the mNAV is 2x. That means that if you're buying $2 of equity in the company, you're getting a claim on $1 worth of Bitcoin. And so why would that make sense? I think that what the skeptics miss is that when you are looking at equity valuation, you're looking at, okay, what are the expectations with regards to the future? And the proponents of Bitcoin treasury companies would point to the fact that over the past, the companies have increased the Bitcoin per share. And so if you assume that the companies will continue to increase the Bitcoin per share, that means that the company will be able to grow into that mNAV. So meaning that if you bought $2 of equity today and you got $1 worth of Bitcoin, if that company is going to increase their Bitcoin per share, or let's say double it over the next 6 months, then that means that you've been made whole on your investment, and then anything else after that will be Bitcoin per share profit. So that that narrative is then confounded by the fact that the company is increasing its Bitcoin per share by issuing more shares, and they call this BTC yield when they are able to issue shares at a premium, right? Because the mNAV is at 2x, they issue shares, they go buy Bitcoin, and that means that it kind of starts to look Ponzi-ish of the old investors getting BTC yield from new investors. I think that it really the Ponzi argument falls apart if you also add in the leverage. So today, most of the Bitcoin treasury companies that we're watching have very low leverage, if any at all. And so the whole point I made earlier about the ability to borrow against the Bitcoin is really what we're talking about here is the option value of doing that in the future. So just the fact that they could potentially leverage up in the future, then that's where it looks like, well, that might be interesting for the shareholders because, again, it goes back to the fact that they're going to be able to borrow at a lower interest rate than the expected returns of Bitcoin. And the difference between that, the spread between the cost of debt and Bitcoin's returns, that will accrue to the shareholders and increase the BTC per share, as long as we're bullish on Bitcoin.
As a reminder, you only have to put up with my questions for about half of this. We'll open it up if people want to start requesting to come up and ask Pierre some questions. I do want to ask some more dumb questions about mNAV now that we're talking about it. So, okay, I get it. So there's this idea that the company should be worth at least the Bitcoin that it owns. In the case of MicroStrategy, right, dipping below one, that was a buy signal. And there's this idea that the mNAV, maybe shouldn't be too high. Well, maybe let me just pull an example. I guess so I'm using the Bitcoin Treasury.net tool. I'm moving over to mNAV. I want to pull out a couple examples. So Tesla, this mNAV is 764 and Rumble's mNAV is 119. So obviously, this means that the market cap of these stocks is much higher than the value of their Bitcoin. But these are companies, right, that are valuable equities on their own, right? They're not maybe necessarily Bitcoin treasury companies, but they have high mNAVs. What do we make of that? Does mNAV become a useful metric for these comparisons?
So I think mNAV is only a useful metric for the pure plays. When we start looking at a company like Tesla, the valuation is really based on the earnings from selling cars, perhaps selling robots in the future, perhaps doing driverless cars and all of this. And so it's really unrelated to their Bitcoin holdings, and that's why if you do an mNAV of a company like that, you get a very high number. And so I think that we have to be thoughtful about what metrics we use for what different kinds of companies, even if they are also holding Bitcoin.
Got it. Okay, so in this case, we're not using. You wouldn't put any value on Tesla having a mNAV of 700. Tesla's is still a good company, even though their Bitcoin is they hold too much Bitcoin.
Or they're a bad company in the sense that they're not pursuing the playbook of accumulating Bitcoin. So they have not really been very aggressive in putting their balance sheet into Bitcoin. Um, so we can debate, and in fact, it's really interesting because Tesla and Nvidia, kind of the Magnificent Seven, I, they're the only ones where you could say, hey, look, the return on invested capital of their assets has been greater than Bitcoin's returns. And so what they're doing is actually rational, which is they're going to invest in AI or more factories rather than buying Bitcoin. The rest of the stock market, if you look at their return on invested capital, let's say it's 12%. Well, then that means that they should have bought Bitcoin instead of investing in producing goods and services.
Got it. Okay, so we're throwing out that data for Tesla. For Coinbase, maybe a different case, right? This is a company that had an early advantage, could have acquired a lot of Bitcoin. We know now that they don't have a lot of Bitcoin. They have about 10,000 Bitcoin. mNAV, their mNAV is about 86, so the company is worth 86 times the Bitcoin. Are you putting weight on that mNAV metric because the company is in the crypto space?
I'm not. I think that if the board and the CEO, Brian Armstrong of Coinbase, came out and said we're going to monetize the mNAV by selling as much Coinbase shares as we can to buy more Bitcoin, then I think that the metric would become useful. But since they are taking a much more cautious approach, and I think that their approach is really close to just dollar cost averaging out of free cash flow from their operations, which is the trading fees on Bitcoin and other crypto assets.
Sorry, so you'd like to see them maybe take those earnings of big Bitcoin and just keep them on their balance sheet.
I think they'd have to go further than that. They would really have to sell equity, right? They've done stock buybacks, which is the opposite of the Sailor playbook. And so I think that the mNAV metric is really only useful in the context of accretive dilution of selling stock to buy Bitcoin.
Okay, we're gonna keep running through this so I can grok it again.
Yeah.
If you guys can want to ask some questions, feel free to request. We had somebody who came up, then they timidly backed down. You're welcome to come back up again. Mara Holdings right now. I'm looking at their MAV. I'm on the rankings. They're coming in at just 1.002. They're almost at a pure one, where the company is equally valued in market cap to their Bitcoin holdings. That is good. That is a good metric. That's a question.
Maybe, because then we have to look at are there liabilities that we're not taking into account in the calculation of the mNAV? Because if the mNAV is purely based on the financial liabilities, that is the debt that a company like Mara has, it might not be taking into account other potential liabilities that would for example, what about the loudness of their data centers, right? I just saw, and I'm not picking on Marathon or anything like that. I'm just using this as an example. Let's say that the shareholders are factoring in the fact that Marathon might get sued because their data centers are too loud for the adjacent residential, living spaces, and so that would be a potential liability that then would need to get factored into the price. The other part is the assets, right? So if we're calculating the mNAV and we're including, for example, mining rigs in the case of Marathon, again, purely illustrative example. I don't have a view on whether Marathon is under or overvalued. I'm just highlighting why mNAV on its own cannot capture all of the nuances because there's an operating company. And so if the mining rigs are depreciating rapidly in value, then the asset side of their balance sheet might be you could argue is overstated, right? And so you need to actually deduct more assets, and that's why the mNAV on its own is not a useful metric in this context. I think that you really have to get to a point where 99% of your balance sheet is BTC, or maybe let's say more charitably 95% for the mNAV to really be helpful. And then on top of that, and so we've got three financial statements, right? We got the balance sheet, we got the income statement, and the statement of cash flows. I would also argue that more than 80% of your cash flows has to be related to your Bitcoin strategy of financing inflows from issuing debt and equity, and then investing outflows to buying BTC. If that is not the case, if you have lots of operating cash flow, then the valuation is going to be overshadowed by metrics relating to the operating company, not to the balance sheet of mNAV.
This helpful stuff. We got Wayne up here queued up to ask a question. I'm going to do one more example as we're going through mNAV. As we went through Tesla and their crazy large mNAV, we threw that out. We talked about Coinbase's mNAV. We talked about Mara's mNAV. Lo and behold, at the bottom of the list, sorting on Bitcoin, treasuries.net, all the way down on the end of mNAV, we've got 21 ranked 137th by mNAV, 0.063 mNAV. It sounds like then they would have a lot more Bitcoin than the company's actually valued, and thus have a very low mNAV. But maybe that's not good. What's your take on on a super low mNAV? This is it looks like below 0.1 mNAV.
Yeah, I think that's where we've really got to look at where they are in the process of standing up the company. And so, we can look and see the press releases where there have been announcements that of things that will happen in the future, but that have really not happened yet. And so, in the case of 21, we could argue that there's a high probability that they will happen because they have very credible backers with Tether and SoftBank and Jack Mallers. And so when we're doing the financial metrics, it's very tricky because we've heard that they already have the Bitcoin, because obviously Tether has a large stockpile of Bitcoin. But we have to wait for the dust to settle on the financing process of their SPAC with Cantor's vehicle. And so I think that the mNAV for 21, we will want to look at it in probably in 18 months, when not only has the dust settled on the SPAC process, but also that they have access to the ATM, the at the money or at the market offering for their equity, to be able to monetize that and have accretive dilution. Because with the SPAC process, they actually have a 12-month period where they cannot perform the same financial engineering that Saylor is currently relying on.
Interesting. So, would you say then, closing the book on mNAV, it's just sort of you actually kind of want a balance between the health of the company as an operating company and the balance that they have in Bitcoin, and that's kind of what the utility of the metric is at the end of the day. It's giving you some numerical relationship between that.
Well, I think that you want to not look at mNAV in a vacuum. You want to look at it in the context of the company. And so, personally, I'm very skeptical of operating companies, meaning that the um, the operating cash flows, in my mind, should really be about providing a cushion for making interest payments for debt that was taken out to buy Bitcoin. Not because we expect the operating cash flows to be rapidly growing. So it really depends on the specifics of the company, whether the mNAV is a useful metric or not. And that's where when we compare holding BTC, Bitcoin, to holding any of these Bitcoin treasury companies, I would argue that you need to do a lot more financial modeling and due diligence for Bitcoin treasury companies to understand all of the underlying nuances, because you basically need to understand the risks and the returns, the potential returns for Bitcoin, and then layer on top of that all of the financial engineering, all of the 10Ks, all of the disclosures, all of the mechanics of the SPACs, and the reverse mergers, the pipes, and all of the dilution, to then be able to understand, okay, I'm bullish on Bitcoin, and I think this Bitcoin treasury company is undervalued, overvalued, or at fair value.
Interesting stuff. We've got Wayne brave enough to come up here. As a reminder, if you want to request, we are going to open up the stage for people requesting the ability to speak to Pierre and myself here. Toby, if you want to come up, just make that request. Wayne, welcome to the stage, veteran of the Bitcoin space yourself.
Hey Pete. Hey Pierre. Thanks for doing the space. Are you guys gonna be doing these more often?
Yep, we're gonna start running them daily. Probably do them around kind of big equity announcements or earnings calls. Trying to get something together on the MicroStrategy later this week, so people can kind of dissect that analysis. But yeah, yeah, we're gonna be rocking and rolling.
Yeah. I've got a comment and a question for you guys. So, we've got all these Bitcoin treasury companies, and you guys were just talking about mNAV. And, of course, these companies, they don't have earnings, most of them. So there's no multiple of earnings to help you get to a price. So you have to have a multiple of the what's on the balance sheet. And that's the metric that people are looking at. Um, and companies like MicroStrategy have a different mNAV, let's say, than the other people at the long end of the tail who have much less Bitcoin. W- What's your take on what the distribution of these mNAVs are going to be in terms of is it going to be relatively uniform across the board over time because the ability to acquire Bitcoin is going to get it's going to homogenize across this entire set of companies? Or do you think it's going to have some other sort of distribution where some are going to have advantages over others?
Yeah, that's a great question, Wayne. So first, I want to touch on the first statement that these companies don't have earnings, and this is really where I think that we've got to be very careful about the terminology, and we've got to study the financial accounting, because technically these companies do have earnings, and so for example, if we look at MSTR, their previous quarter, they had a blowout earnings. They had an amazing earnings per share, and it's really because of the new accounting standards where the unrealized gains on the Bitcoin do flow through the income statement, and that is earnings. Now, we can debate the quality of the earnings. Oh, unrealized gains shouldn't count, and so you want to somehow have an adjusted set of earnings. But really, we've got to be careful about the accounting terminology. I think that it's probably more fair to say that their operating cash flows, their free cash flow from operations, is immaterial relative to their balance sheet, right? And so I think that we've just got to think through what financial terminology we're using in this context. And if we're not comfortable with the financial terminology, then it's best to just stick to Bitcoin, right? Because otherwise, we're going to trip ourselves up. The second is, where will equilibrium mNAVs end up? And I think that if we look at just the pure play kind of ideal Bitcoin treasury company in a vacuum, um, I think that somewhere between 1 and 2x uh, probably makes sense in kind of the medium term. If to get above 2x, I think that usually what we're looking at is an early stage Bitcoin treasury company where they are able to essentially increase their Bitcoin per share at a pace, at a rapid pace, that then they grow into, and so the mNAV naturally compresses without any kind of uh, it's not a negative in the sense that it's not something bad that's happening. It's just that because the company is realizing the yield on that premium, that it's going down, and then what keeps it from going below 1x is that essentially Bitcoin goes up over time. And so when we think about why did MSTR recover from going below 1x, why didn't it just have some kind of death spiral? Because if you're below 1x, you can't do accretive dilution. Well, the reason is because Bitcoin's price started increasing, and so I think that Bitcoin's price is ultimately what will rescue mNAVs from going or staying below 1x.
Yeah, I think there's another metric that people are working on, forward mNAV. We just added it to the glossary. So if you go over to the Learn section of Bitcoin Treasuries, you'll see it in there. That's sort of what you're talking about, Pierre, right? The basically the months to cover the mNAV, right? There's a new metric that
Yeah,
sort of looks
and
into
this is
how
a
the company.
concept, yeah, popularized by Adam Back, and I think that it makes a lot of sense to try to conceptualize, because essentially what you could argue is that if the market is assigning a greater than 1x mNAV, what the market is telling the management team is that they want the management team to sell stock and buy Bitcoin. And if they're at a 1x mNAV, the market is telling the management team to not do that.
Wayne, does that answer your question, or did you want to dive into that a bit more?
No, I'm good. I'm gonna get back to fishing here off my dock, but good luck with the spaces. I'll tune in from time to time.
You got a tough life there, man. It sounds taxing.
Yeah, I'm gonna have to go pet my golden retriever a little bit and play with my son too. So it's hard
Well,
to step away
we'll
from that.
let you know when the companies really start roaring. But appreciate you stopping by.
All right, take care, folks.
All right,
Bye.
we've got a couple other people on stage. Yeah, appreciate that, Wayne. We've got Daniel. Well, I think it might be the last one remaining here. Daniel, how's it going?
Good. Can you guys hear me okay?
Yes, sir.
Perfect. Well, thanks for doing the spaces. I'm not in this world a lot. I'm pretty much just a Bitcoiner, but I'm deeply interested in the space. And I think my question is simple, and forgive me if it's stupid, but I've always wondered, is there a time where Strategy specifically could own all this Bitcoin, but not have any liabilities tied to it? I know that Pierre talks a lot about how these debt and equity issuances over long periods of time, which is great. But I guess I'm always just wondering, is there an opportunity one day, whether that be 5 years, 15 years from now, where they could own all all this Bitcoin, but have no liabilities attached to it in any way? And if the answer is yes, is that beneficial in any way?
So I mean, the answer is yes, in the sense that anything's possible on the capital stack, and so they could completely deleverage. But the disadvantage would be that their access to credit and the lower interest rates they have. That's kind of part of the reason why it's attractive to the common stock shareholder. And so I think that we've actually heard a lot of retail investors express disappointment that MSTR is not levered enough. And so I think there's a lot of pressure from the shareholders to get more leverage. And on the flip side, I think that the more institutional shareholders are, and Mr. Saylor and the board themselves are kind of moderating that and saying, well, look, we don't want to get overextended either. Let's have intelligent leverage. Otherwise, we do run the risk of not getting liquidated and having to sell the Bitcoin, really, but having to over dilute the common stock if there were to be a long bear market.
Gotcha. It makes total sense. That's all I had. Thank you, Pierre.
Yep.
Yeah, so we've got a couple other requests. Keep them coming if you want to come and ask Pierre some questions. I guess I'll take the next one while we got people coming up here. So Pierre, I guess on the long tail, these metrics we talked about forward mNAV, we talked about mNAV. There's really a lot that are coming. There's like torque adjusted Bitcoin yield, risk adjusted months to cover. We've got them all in the glossary. Are there some of these that you like? And then do you have an idea of what they're generally trying to express? I mean, it seems like they're generally trying to offer a picture of, for the end equity holder of whether they're gaining value in Bitcoin terms, right?
Correct. And so I think that a lot of them are really trying to get at the question of how much value is the leverage creating for the common stock. And so that is a crucial metric for people who are trying to use these equities to try to outperform Bitcoin. They have to look at, okay, if Saylor does this with the convertible bond or with perpetual preferreds, how much value does that create for the common stock? And the other, I think, challenge for the valuation metrics is that then when people start looking at these and they start pricing in, for example, they say, well, if the torque is really effective, and they do believe that the leverage will create a lot of value for the shareholders, that gets priced in. And so that actually causes the common stock to trade at a premium, right? And then the question is, okay, well, for the new buyer, are they getting a interesting buying opportunity, or are they getting something that's overvalued because the future leverage or the existing leverage is already priced in to a point that the common stock is now trading at a rich multiple?
And so, how does that leverage show up in something like so? This is why the long tail metrics have been created, right? So, like within mNAV, you don't see the leverage component, right? That's just a pure function of how much Bitcoin the company owns and the market cap. And so, these other metrics are. Is there a certain metric that you like that you think does a good job of baking in like the leverage or how that's calculated?
Well, I always take it back to rather than trying to just look at the metrics is really to me the cost of the capital, right? Of the debt. Sorry. So I look at in MicroStrategy's case what their preferreds are trading at, and so for example, if we look at the Strife, which is a perpetual preferred that pays a 10% interest, it's trading at $114 today, meaning that he's actually able to raise debt at less than 10%. And he's able to do that on terms where he cannot get called, meaning that it's permanently out there until strategy decides to retire that debt. And so if you want to look at what is the cost of debt for a company, when in Saylor's case, it's very transparent because he has these perpetual preferreds that have a ticker symbol that are trading out there. For the other treasury companies, that's where I think that really the shareholders need to, or potential shareholders really need to look at them very closely because there's not that level of transparency yet. And so, if you're more conservative, you would probably want to wait until these other treasury companies come out with preferred shares so that you're able to have a metric that is very transparent and is market based and is not really specific to that company in the sense that the other metrics might be.
Yeah, it's really interesting stuff as I've dived into the equity analyst portion of this, where there is an opportunity cost, right? If you put money in one of these equities versus another equity, I mean, it is, you're essentially looking for Bitcoin return on the time of that capital allocated. Gabriel, we got you up here. Welcome to the spaces. What's up?
Hello, gentlemen, and thank you for this wonderful opportunity. I'm joining you from Sweden. I have a few questions regarding on when to buy these company stocks because I have noticed that looking at the TA does not do it any good. So by listening to you, gentlemen, I have noticed that maybe buying them when they
Did we lose you there? Did we get rugged? We get
were
Elon
looking
rugged?
at as well. And I have also a question regarding the SPACs, like CEPO, Counter Equity Partner 1, and CEP 21 Capital. Is their mNAV is already baked in the stock price, or would that be changing once the company goes public because they might have a different amount of shares in the company?
Yeah, great question. So basically, I would argue that on one hand, you have the efficient markets hypothesis, which says that, hey, all of this information is transparent and it's fully disclosed. So the market participants should be able to price these fairly and say, okay, well, even though the SPAC shares are thinly traded and they don't represent the final form of the company, they should be trading at the correct value relative to where it will be in 12 months, let's say, or after the transaction closes. The counter argument would be that we've seen situations where the retail public, which is speculating on these kind of uh, vehicles that have not fully formed yet, is not acting with full information, which I think honestly, not to pick on you, but is kind of reflective of your question, which is that it is hard to understand all the information that is being put out by these companies, and these companies can't necessarily put out all the information that an informed shareholder would want, meaning that their hands are tied by the legal team saying, hey, you guys cannot go and condition the market and be fully transparent. Instead, you've kind of got to play your cards close to the vest until the proper filings have been made with the SEC. And so that creates a lot of uncertainty for shareholders. And that uncertainty translates into misvaluation. And so, for example, we had a situation with a company called Sequans where they had a pipe deal, and meaning a private investment in public equity, where institutional buyers of the equity were going to, or are buying that stock, but the terms of that and how quickly they would be able to buy the Bitcoin, there seemed to be a lot of uncertainty, which caused the stock price to be very volatile, where it went up a lot and then it went down a lot as the retail market digested the information. And so I think that that situation presents a challenge to the efficient markets theory because the information is there. There might be some asymmetries, not necessarily in the disclosures, but in the digestion of them. And so that's where I think that if you have questions where you're not quite sure if the mNAV is being properly calculated or reflected in today's stock price, it might make sense to not invest and to simply uh, sit on Bitcoin and wait either for that information to become clear or to just enjoy the fact that these companies are buying Bitcoin and thus, improving your position even if you don't actually hold the stock.
Yes, thank you. And maybe also finding out who's the CEO, what is their history, are they serious, how well they are in the crypto space, and what is the trajectory for that company. Then I kind of build a more cohesive understanding of where the company is going.
Yeah, I think that's absolutely right. The due diligence process cannot just stop at the metrics or the marketing. It does, I agree, have to get into the management team, because if you have a management team that has a history of kind of just jumping onto the next shiny object, then you're really moving away from the Sailor playbook. Sailor has been relentlessly pursuing the Bitcoin accumulation strategy for the past 5 years. And so he has a proven track record of not getting distracted by shiny objects. And, that execution cannot be overlooked. Uh, by contrast, you might have new players today who, if you look at their history, well, do you know that they're going to stick to the Bitcoin strategy for the next 5 years? Lots of question marks there, and so that's where you've got to be really cautious about who you're giving your hard-earned money to.
Exactly. And regarding when to buy them, is it, of course, this sounds more realistic to buy them when the mNAV is low, near to 1 or maybe 1.5 or something. That will be a best
Well,
entry.
not necessarily, because a low mNAV might actually be telling you that they are not going to be effective at increasing the Bitcoin per share going forward. And vice versa. And so I think that you really have to you have to look at, why is the mNAV low? If the mNAV is low because sentiment is bad and the Bitcoin price has been going down, and volatility has been suppressed, then that might mean that it's an interesting entry point. But if the mNAV is low because the market has very little confidence in the management team's ability to increase Bitcoin per share over the coming months and years, then that might be a red flag, actually.
Yeah, well, in this case, pardon me, maybe I have too many questions. Well, in this case, we have seen that MicroStrategy have not reached its all-time high, which was 500 plus, and but Bitcoin is trading over 100,000 as we see now. So that's divergence between the MicroStrategy and the Bitcoin price. Is it due to a market sentiment or maybe ATM in that case because the mNAV was going down as well?
I think it's really due to the fact that MSTR's valuation, I would argue, is the sum of Bitcoin's price and Bitcoin's implied volatility. Meaning that if Bitcoin is slowly going up, then while so obviously Bitcoin slowly going up will be negatively impacting implied volatility, and so you have two variables going in opposite directions, right? And so if implied volatility is collapsing, as it has been over the past, let's say, 3 to 6 months, then paradoxically, MSTR's share price could actually be going sideways even while Bitcoin is going up. What you want to have for MSTR to really do well would be explosive moves, right? Where Bitcoin is going up a lot, and that's what we saw essentially if we look at 2024, right? Especially after the Trump election, where you go from, let's say, $70,000 to $100,000 in a very short time frame. And the reason why that is really beneficial for MSTR is because now, in those conditions, the traders who are looking at forward expectations, they're going to say, okay, well, look, Bitcoin's gone up a lot. I think Bitcoin's going to go up a lot, continue to go up a lot. And so they bid up the call options. MSTR has a very rich options chain. I would argue that's one of their competitive advantages, is how much liquidity they have in their options. And so then that creates lots of demand, right, for the stock. And so um, we have to, when we're looking at the valuation of MSTR, we can't just look at where is the Bitcoin price. We have to look at what path has the Bitcoin price taken to get to where it is today, and where do people think it will go in the near future. And that will inform kind of the implied volatility, and thus, kind of the wider demand for MSTR beyond just the spot Bitcoin.
So basically, it's a very complex.
It
Yeah.
is, and that's why I think that when it comes to investing, we have to draw a distinction between saving, where you're just holding money, which I would argue that's what holding Bitcoin is, where you just put it in cold storage and you verify it with your own node, versus investing, where you're actually giving your money to somebody else in order to make more money. And that comes with a lot more risks, even if you think that it might have more opportunity. It demands a greater amount of research, both qualitative, like what's the management team, what are the geopolitical risks, what are the regulatory risks, but also quantitative, of what is the risk from a volatility perspective, and what's the risk from a leverage perspective.
Thank you very much. I really appreciate all this information, and we're really looking forward to have more of these conversations in the future.
Yeah, man. Thanks for coming up. We've
Yeah,
got
thanks
a
for the
few
great
more people
questions.
up who want to get them in before we can move along here. Let's go with Brittany. A shout out, second spaces in a row. I know you were here yesterday for Will. Appreciate you coming by.
Thank you so much for hosting this, so much information. I will definitely be here for the future. Thank you guys for having me. I just had a question going back to savings versus investing. Do you see paper Bitcoin summer as a concern or an opportunity, speaking for long-term holders?
So I definitely see it as an opportunity, meaning that if you are just holding Bitcoin, the risk would be if the treasury companies were taking on leverage where if Bitcoin goes down 10%, suddenly they're getting wrecked, right? And they're having to panic sell their Bitcoin, and then that caused cascading liquidations. Something that we actually saw March 12th of 2020. If we look at the price chart back then, that was during the kind of the COVID panic on that specific day that caused Bitcoin to flash crash because there were so many leveraged traders on platforms like, for example, BitMEX or others, right? Where they are not just leveraged, but leveraged in a way where they get automatically liquidated. That's just not the case with the treasury companies. And so today, maybe in the future, they will become very irresponsible and they will take on too much leverage. I'm actually even skeptical that that will happen because operate within a governance framework where there's actually liability for the management team and for the board of directors if they do become irresponsible. They will get sued by the shareholders who get liquidated and are hurt by the irresponsibility. And so there are fiduciary responsibilities for the management team. And what I think could happen, though, and this is something that we have to look at very closely, is that even if the company is not forced to sell their Bitcoin, that if the Bitcoin price goes down a lot, what could happen is that the company is forced to sell shares to pay the interest on the debt. And so, for example, in MicroStrategy's case, they have these preferred shares where they have to pay a 10% coupon or dividend. Let's say it's quarterly in the case of Strife and Stride and Strike, or even monthly in the case of their new offering Stretch, where they have to sell shares to pay that dividend. And shares of the common stock, perhaps, although they could sell any kind of securities to pay that coupon. Um, and that could mean that the shareholders, the common stock, MSTR, could be diluted, heavily diluted, in order to make those payments. That, though, that damage is really limited to the holders of MSTR. That would not affect holders of BTC. Likewise, if a company were to go into bankruptcy and they do Chapter 11, where they don't sell all the Bitcoin, right? Chapter 7, they would liquidate all the Bitcoin. That would be a problem for holders of BTC. That. But if they do Chapter 11 reorganization, the debt holders, that is the people who lent the money to the treasury company, they magically become the equity holders. And it's the equity holders, the old equity holders who get wiped out, right? And so that's where I really think that the treasury companies are now becoming a cushion for BTC, and they're not actually becoming an arsonist or an accelerant of liquidations. They're going to slow down liquidations because we're going to burn the equity holders of the treasury companies before we sell the Bitcoin onto the market.
We
Thank you
got some of
so
the
much for that in-depth answer. Just to follow up, with all of the opportunity that you do see, what do you think is the best way to be positioned in this moment? Do you think buying into SPACs or purchasing ETFs? What would you do?
I would first you got to start buying Bitcoin and putting it into cold storage.
If you're
And
past that,
also,
if you're way past that, and you've been holding your Bitcoin in cold storage, how is if you're trying to invest instead of just save now?
yeah, that's a great question. I think that I would start with a very conservative approach, which is really looking at who's been doing it the longest, right? So, first of all, MSTR. Second of all, Metaplanet, right? And then third of all, you've got kind of all the others. And so, I think that if you really want to um, be conservative about this, that would be the way to go. But you've got to prioritize education, meaning that if you want to really be investing, you got to start with the basics of the kind of the financial accounting 101, and crack open a textbook and start reading the 10Ks. Otherwise, you're kind of putting your money into a black box.
Thank you so much for that. That was exactly what I needed. I appreciate that answer.
Yeah, great
Coin
questions.
Bazaar, did you have a follow up on that? I know you had your hand up.
Yeah, hi, thanks. Thanks. May I?
Yeah, are you? Do you have
Okay,
a
fine.
separate question, or are
You know,
you?
no, there are so many questions there are so many things that have been, talked of. The first question is that when we talk of Bitcoin, there are so many things that have not been talked about. It is as simple as that. As much as we talk of MSCR, as much as we talk of Michael Cedar, as much as we talk of anything else for that matters in the world. But where do we actually land? We land to a place wherein we need to find a solution. That's what exactly people are not looking for the things that they wanted to do. It's not about the space that, okay, fine, we have a space and we have to talk about, but it's about the space that what Bitcoin has actually brought into the market, how it dwelled in such a way that anyone who's who of the world has has been there. It can't be it can't be miniculed. It is something that has to be embraced. We can't just go here and say that, okay, fine, because we have so many things. So exactly the way that AI with NFTs, with CBDCs, probably you have not heard CBDCs for so long. Most of the people do not even know that, okay, fine, what is the abbreviation of CBDCs? We have the aura of that thing, but we did not had it now. We are just bringing the value, not we are not in a sense that I am or you are, but we all are bringing the value to the things that have been there. The person who actually had it, what he incepted it. So if I have told so many times, 10,000 of times, that it is not right to compare fiat to Bitcoin, not to a dollar to Bitcoin. It's not right.
Are you just making
Do the
sort of a
things.
general? You don't like the idea that these
Yeah,
companies
exactly,
are,
exactly. Just a
valuing
moment, just
Bitcoin?
a moment, just a moment. You know, because Coinbazar has not given that thing to go ahead and speak all everyone. I assure you that everyone out here in the world have seen that the things have been there, who have given the chance to go ahead and speak. So we have our own journey. Everyone has, but what is there the journey for the commoner? For the commoner, there was never a journey. It's just that lose. We just manipulating the lose. That's it. Everyone doesn't have to lose. People have to gain. It's simple. Gain in every single way. They have to go ahead and explore. They have to go ahead and the security is the major part that happened everywhere and everywhere around the world. No one's talking about that. Who is talking about that? No one. People are talking about How are we going to go ahead and this thing? How are we going? That is not the concept of anything for else that matters with Bitcoin. It happened. It's a state. That's how it happened, and that's how.
I'm sorry, is that a question or is
No, no. Okay, fine.
we're
My question is that even if you want to go ahead and do anything with the whole crypto word, the crypto thing, the Bitcoin and anything and everything for else it matters, how much
yeah.
we have realized that what exactly matters to us. Simple question. What are you going to do with Bitcoin, or what are you going to do with altcoin, with meme, with AI? What are you going to do? What is the value proposition for you or for anyone else in the world? It's not the world that happens. Yeah, that's the simple word.
Yeah, okay. So I mean if I understand that correctly, it's the kind of the age-old question of what is the actual utility of Bitcoin? And I think it's misleading to say that nobody's discussing this. I think it's been discussed ad nauseum. Arguably, it's beating a dead horse at this point. But in any case, I think that one of the reasons why it doesn't really get discussed might be because it's obvious that the whole point of money is to be able to transact with it and to save it, right? Those are the two purposes of money, and that's the utility of it. And that quite often, this question is, hey, aside from being money, what's the value of Bitcoin? It's kind of like saying, like, aside from transportation, what is the value of a car? It's just removing the central purpose of it and then saying that it has no
Well,
purpose,
I mean,
which
I think
is
it
tedious.
it speaks a little bit to like the general sentiment around the Bitcoin Treasuries movement, right? Where I think this is definitely true on like the crypto side of the space, which is more sort of, I guess, in love with the sort of cypherpunk dream of Bitcoin and cryptocurrencies, right? Where they see Bitcoin finance as something that's like too bland to be interested in, which is I think is like the blind spot, right? Like that's why people have trouble kind of connecting with this and seeing that it's probably going to be the next stage of adoption. It's just finance people learning how to finance with Bitcoin, and I think it distracts from some of these other narratives, right? Because at the end of the day, it's like it's a narrative war.
Yeah, I agree. And if we go back to 2017, it was payments versus digital gold. I think that it is an extension of that narrative war. I would argue that we can have our cake and eat it too, meaning that we can continue to make progress on Lightning and increasing payments adoption for Bitcoin, while also seeing Bitcoin adoption in the financial system. And to me, there's nothing more cypherpunk than seeing billions of people get exposure to Bitcoin, for example, through the S&P 500 or through an index fund that happens to hold stock in a Bitcoin treasury company. And so
So
even though
you
they
said there's
have no
nothing more
knowledge.
cypherpunk than that.
Yeah, I really think that it's just a total victory for the cypherpunks, and that you've also heard lots of people say, "Oh, people will use Bitcoin without even knowing that they're using Bitcoin, right? It'll just be in the background." And here it is happening, but it's just happening in a way that people were not
Yeah,
anticipating.
I think that's why the crypto side of the ecosystem, and maybe we can kind of segue this as we wind down here. It's they were the slowest to kind of adapt to this narrative. That seems to be changing. I know you had a spicy take this morning about crypto companies, maybe the digital asset treasuries, co-opting the playbook. But yeah, it does seem like there's some attempt to run this playbook in that side of the community. What are your thoughts on that?
Yeah, the 180-degree shift has been really fascinating to see. Over the past 5 years, the crypto influencers on X have been really ridiculing Michael Saylor for doing this, of accumulating Bitcoin on a TradFi balance sheet. And they've been criticizing Bitcoiners for, celebrating the fact that he's doing this. But now that he's really, I think, over the past 6 months, proven that there is product market fit here. Now we're seeing lots of imitators, and so even Joe Lubin from Consensus has sponsored a Bitcoin treasury a Ethereum treasury company. And we're seeing the takeoff of what are being called digital asset treasuries, DATs, basically altcoin treasury companies, to adopt the Saylor playbook. And, it's, to me, I think it just reflects a fascinating turnabout, where, Saylor's proven that securitizing is more valuable than tokenizing. So over the past 10 years, it's been a constant litany of, we will bring traditional finance into the crypto world by tokenizing securities, or issuing tokens that are transcending securities and are not securities but are financing economic activity, and that will be what is the kind of the crown jewel, or the best product market fit for the crypto world. And, that largely has failed. It's gotten lots of financing, lots of attention, right? Lots of money was spent on creating token platforms to tokenize the world. But now, today, what they're seeing is that securitizing tokens makes a lot more sense. Why does it make more sense? Well, it really has to do with the fact that the world's capital is in securities. And so, if you look at the size of securities markets, it really eclipses the size of the crypto markets. And so it just makes more sense to look at it through the lens of, if we're trying to get more adoption, meeting them where they're at, rather than trying to drag them into the crypto world. Um, and, you know, to be fair, there has been success in dragging some TradFi players into the crypto world, but what they found was that there was not a lot of value there. And so it didn't really snowball. Now, with the opposite happening, where we are securitizing Bitcoin, for example, that has unlocked a lot of value. And it's unlocked a lot of value for really two sides of the market. On one side of the market, you have players who want more volatility, more risk. They're trying to outperform Bitcoin, or they're trying to outperform whatever token that they are putting into the treasury company. And then on the other side of the spectrum, you have players who want to take on less risk. They want less volatility. They think that crypto is too volatile, and so they want to, essentially lend against the tokens. And so that's why there's been a lot of interest in securities markets, not just for Bitcoin treasury companies, but now also for these digital asset treasuries. Cynically, you could argue that they are just dumping their tokens from foundations quite often. So we've seen transactions where the tokens are going straight from the foundation that created that token out of thin air into the treasury company, and so they are dumping it into the public retail markets. But I don't think that's even the real problem. I think that the real problem that they will find is that there's really a lack of scarcity, meaning that there's a lack of scarcity in terms of the quantity of crypto tokens, but also within the specific crypto tokens themselves. And so as they increase in value, there's lots of pressure on those who control the levers of power within those tokens to issue more and to create more, and to dilute the token holders. And so I think that they are building on top of sand, which is not a great situation to be in financial engineering, and that they're leveraging up the asset side of the balance sheet, even if they don't leverage up the liability side. So personally, I'm very bearish on the digital asset treasuries. I think that it reflects a very opportunistic, mercenary mindset, which will not hold up over the long term, even if they get short term pump and dumps.
Alrighty, very eloquent. Well said. We've got a couple of speakers who have waited it out. Pierre, how are you doing on time? Can you take a couple more questions?
Yeah,
Okay,
let's
we've
do it.
got Julio from Crypto Quant, head of research. Julio.
Thank you, Pierre. Thank you, Pete, for putting out this space. And Pierre, I have just one question regarding, different risk profiles for these Bitcoin treasury companies. Do you think that there's like a different risk profile depending on what type of shares they're issuing? Like, for example, MicroStrategy initially buy Bitcoin with cash, and then they issued common stock, and now the preferreds. Do you think that changes the risk profile? And other companies also issue shares, but they're structured differently. So, do you think that there's a different risk profiles depending on what you issue and how do you structure it?
Yeah, absolutely. There's different risk profiles. I think that in your explanation of MSTR's history of issuing securities, um, you kind of ones that were riskier. So, even the convertible debt, I would argue the convertible bonds are riskier than the preferred stock because there's refinancing risk. So, in future years, Sailor's going to have to refinance those converts, and so there's a risk there that does not exist with the preferreds. Your point is correct, though, that you have to carefully evaluate all of the securities offerings to understand what their risks are, and you have to cross that with at what price are you acquiring that security? The biggest risk, in my opinion, is buying an overvalued security, meaning that even if in a vacuum, if you don't look at the valuation, that the risk is very low, but then you buy it at a very high premium, the risk of losing value is very high. And so, there's no, you'll hear people use the saying of there's no bad securities, there's just bad prices. And so you want to be very careful about not just underwriting the risk, but also looking at what the valuation is on that security.
Yeah, and so that's for the for the retail investor, right? Like the
It's no,
valuation,
no. I think that it's
or
universal. It also
okay,
applies for the institutional investors who are looking at this space.
yeah, and for the company itself, like if you issue more like preferreds instead of common, is it more risky for them, like for the company?
Um, well, I think that again, it depends at what price, right? So, uh, you could then look at it in the mirror image, right? So, if they are selling a preferred share that is very overvalued, then it's less risky than selling common stock that's undervalued. And so, it really depends at what price they're selling it. Meaning that, if you look at the preferreds, let's say that they're selling the preferreds at an implied yield of 20%. Well, that's a lot riskier than if they were selling the preferreds at an implied yield of 5% from the company's perspective. But the
Yeah.
opposite is true for the buyer of that preferred, right? And so that's where we always have to look at the fact that it's a two-sided marketplace.
Okay. And if the company needs to pay dividends, do you think that that's much riskier than just issuing common stock where you don't have to pay dividends in terms of liquidity, let's say?
Well, again, this is where you really have to read the fine print on the
Yeah.
securities, right? Because
Hmm.
uh, Stride, for example, they can suspend the dividend payments and not pay dividends, right? So then that removes that risk off the table for the company, but it introduces a risk for the buyer of Stride. And
Yeah.
so, each preferred stock, there's no rules where that universally apply to all securities. And so you want to look at what's the fine print. And obviously, if they are creating an obligation to pay a dividend in the future that they cannot suspend, and that they will have to pay by diluting common stock, that creates a risk for the downside, right? If you're in a bear
Mhm.
market where the common stock is already beaten down, and you might even be trading at a less than 1x mNAV, obviously that's risky. But you could argue that there's risk in the opposite direction as well, right? Where if they are creating an instrument where they are optimizing for downside risk, meaning that they actually are under leveraged, and then the Bitcoin price goes up a lot, they could underperform their peers that were taking on more risk. And so you, as the common stock shareholder, have accrued less value than the competition has. And so you always have to think about, okay, what's the risk of underperforming versus what's the risk of underperforming in a bull market versus the risk of getting liquidated in a bear market. And so, risk is not always in one direction. It's very nuanced.
Yeah. Yeah. Okay. Thank you so much, Pierre.
Thanks, Julio, for joining. I think we've
Yep.
got a couple other people who were snuck in here. We've got Master Hodl. Master Hodl, you want to say something? You got something, a question to ask? If not, we're going to go to Larry Fink, which, just want to make sure the plebs get their due. All right, we're going to go to Larry Fink, I guess, then. Can you guys still hear me? Did we get rugged by Elon? What happened?
I can still hear you, Pete.
All right. Well, I guess Larry's going to rug us. Probably a fitting end of the spaces. He's just a parody account anyway, so maybe he's up here for the lulz. Well, anyway, man, I appreciate you joining. And appreciate all the stuff that you're doing. Maybe you want to do some light chilling of the Bitcoin bond company. We can wrap her up.
Well, I think for this audience, I would really point them to the Bitcoin for Corporations show that I host with the Bitcoin for Corporations team. So go to YouTube and subscribe to our channel. And yeah, make sure you're following me here on X at Bitcoin Pierre.
Sweet. Thanks for the time, man. We'll be back tomorrow with special spaces. We're going to hear from a private company called Stacking Sats that is making some waves in Canada, about to take the stock exchange by storm up there. Very familiar face as the CEO. If you've been in Bitcoin spaces over the years, so that's going to be a fun conversation. If you aren't already, definitely go to bitcointreasuries.net, subscribe to our new email newsletter. You can check out all the features we're dropping there. I mentioned a couple times in the space our great glossary page. It has plain language explanations of a lot of the stuff we covered. mNAV, forward mNAV, BTC per share. If you're diving deep into the analytics, we'd love to hear from you. We're trying to get an advanced version of our dashboard up live with a bunch of these metrics, and as well as some new submission forms for importing that data. So really exciting stuff there. And last but not least, if you go to the main page, you'll see a new events tab. Excited that we're going to be helping curate some of the content, the Bitcoin Treasury's New York City Unconference in September. So if you're heading down there, you'll see Tim Kotzman and Michael Saylor and some other folks at the head of the movement. So you can go onto our website and get events, get a discount for the ticket purchase. We'll see you there. Appreciate everybody coming out. This has been the space for Bitcoin Treasury Space.
Thank you, Pete.
See you later.